So yesterday I was talking about this idea of how much do I believe my business is gonna. Oh, if you take a look at my field, you're gonna see I got some rain. I got more rain coming in today, but it's just a little bit of a drizzle. I haven't gotten any real significant amount of rain in the last about 3 or 4 months, but I mean, I got a little bit of a drizzle here and there, and but the ground is still too muddy for me to pull a trailer back here to load my animals and take them over to the new field. So, I'm probably going to have to see I'm going to see if I can take my animals. I'm going to see when I have an opportunity to take my animals. I'm going to take my animals over to my new field. But yesterday I was talking about this idea of how much money do I reasonably anticipate that my business is going to make. What do I believe my balance sheet is going to look like, and how much of that money do I want to keep in my business as retained earnings, and then how much of that money do I want to pull out of my business as a salary for myself. Why do I want to do that? How much do I want to pull from my business? Why do, etc. I was talking about all this stuff yesterday, and I forgot to mention this one part. A long time ago, I don't know, it wasn't a long time ago, but maybe it was a couple of months ago, I was telling you about this. So I was telling y'all about this whole thing about if you start a corporation, or if you start an LLC, you have legal protection, right? If your business goes under, your personal assets are protected from your business, right? I was talking about this, and when I spoke about this, I don't know if maybe this will be what rings your bells, but it was you should not intentionally do this. All right, I spoke about this. You should not be in a situation where you are going to start LLCs and then you're going to intentionally bankrupt them. Right? I mean, you should not do that. I've always, and I call that selling your soul to the devil. You don't want to be, because the whole thing about selling your soul to the devil is that at first it seems like it's going to be a good idea, and that's why you get involved, and then it never works. The success rate is effectively 0%. It doesn't work. In the long run, it does not work. You should not start LLCs with the intentions of bankrupting them on purpose after you've accumulated whatever, right, services, right? I mean, you should not be doing that. I do not encourage doing that at all. But you should also understand that when you have a business and you have assets for your business that are separated from your personal assets, that those your personal assets are protected from potential bankruptcy of your business. And why did I speak about this? Right? I spoke about this because now it puts you in a situation where you effectively have nothing to lose. A lot of you are completely, you're completely backwards, right? I mean, I've talked about this all the time. A lot of you are you have, a lot of the things that you think about, you effectively think about it completely backwards. All right, nothing to lose is a superpower, right? I talk about this all the time. If you have nothing, that is a superpower. Right? It's not like, oh my God, it is a super. If you legitimately have nothing to lose, it is a superpower. All right. And this is why, I talk about, but on the other side of things, you should not be starting LLCs and corporations, accumulating services, whatever, and then intentionally bankrupting your business. Right? I mean, you should not be doing that, pulling all the money, out of the assets and then bankrupting the thing. You should not be doing that. If you're intentionally doing that on purpose, so that's not a good idea. In the long run, it never works out for you. Because the whole thing, okay, and I want to talk about this idea of, I've talked about all of these, I talk about all these various assets, but the big idea is, if you want to think about it like this: money talks, but wealth whispers. When you see somebody who is talking about money, I've always said you should take a very hard look at this individual, because if they speak about money, when they speak about money, if what they whisper is that they're an idiot, then what you have is an idiot with money. And these people, they don't get very far for very long. You probably won't even remember these people in 2 years. You should listen to the side of them where it's like the whisper. It's like, wow, this might legitimately be the richest person I have ever communicated with. That is the kind of people that you should surround yourself with. You should not surround yourself with idiots that have money. All right, because at the end of the day, if you have an idiot that has money, that they don't get very far for very long. You should really take a look at the individual. I talk about this all the time. You should really take a look at the individual. I talk about this in many different facets, right? The biggest risk to a business is the owner of the business, right? I talk about this all the time. You should really take a look at the individual you should listen to the whisper. You should listen to what they say, and then you should also hear the whisper. It's like, wow, this person is incredibly wealthy, right? They're not rich. They don't have money. They're legitimately wealthy. Right, that's the kind of people that you should surround yourself with, because if you surround yourself with these people, other than having been born with 100 IQ, the chances of you becoming, here's the thing, if you are born with 100 IQ and you legitimately have been, and this is my big thing, is because, why not, right? I mean, why would I not give the world the information for free? Right? Because if you are born with 100 IQ and you legitimately learn how to make money in a wealthy fashion from when you are very young and you learn correctly, you don't have to be very young. If you're willing to drop everything you're doing, and I'm not saying I'm not saying just learn from me. I'm not saying that. All right. You shouldn't learn from just me. You should surround yourself with legitimate wealthy people. Like, when you listen to them talk, you're like, this is a legitimate wealthy person. They don't just have money. They are legitimately wealthy. Right? I mean, the way that they communicate, I actually understand their ideas, and it's like, this is a legitimate wealthy person. You should surround yourself with these people, because other than having been born with 100 IQ, that is going to be the most influential thing in terms of you becoming a genuinely rich person. If you are born with 100 IQ, the chances of you becoming a multimillionaire, I mean, is effectively over 98%. Granted that, you actually learned how to do it from very capable individuals. All right. The thing, and, because but the big idea is that money talks, but wealth whispers. When you look at somebody and you actually listen to what they're communicating, you should also listen to the whisper. It's like, here is, and I've talked about this in terms of Bitcoin, right? I've talked about these in terms of various assets, right? In reality, and I was actually, yesterday, I was just sitting there eating dinner, and this documentary on Warren Buffett happened to show up on my YouTube page. And so I watched this documentary on how Warren Buffett got started in investing. And I actually thought it was very interesting, his investing philosophy. I thought it was interesting. And so I was watching this thing, and Warren Buffett, a long time ago, like in the 1950s, he was looking through businesses one by one. And I've already said that all businesses are evaluated the same way. How are businesses evaluated? They're evaluated at a multiple of their earnings. Right? You take a look at how much money is left over in the business at the end of the year after everything, salaries have been paid, etc., everything has been paid, how much money is left in the business, and then you take a multiple of that number. Most businesses are evaluated at about what? At about 15, 20, 25 times those earnings, something like that. All right, if you have a real, but I mean, it really depends, because here's the thing. It's like, if you have a business, but growth is a very important metric in the idea of business. If you have a business that is growing, then you will evaluate it at a higher multiple, because next year, let's say that you anticipate that you have a business, and you have a business that is trading at let's take the S&P 500, right? Let's just take this as an example. The S&P 500 right now is trading at about 31 times its earnings. All right, if you took the earnings of the S&P, it is trading at about 31 times its earnings. But, what does that effectively mean? That effectively means that the people that are investing in the S&P 500 are seeing an overall growth in the economy in the near future. Why? Because if you have something like, let's just take multiple examples, because let's just take multiple examples, right? Sometimes I talk about the stock market, sometimes I talk about real estate, sometimes I talk about business. Let's talk about the stock market. Okay, let's say because let's just take my business, for example. Let's say my business, my earnings are, this year, my earnings are 60 grand. Let's say that my earnings right now are 60 grand. And my earnings next year are going to be 200 grand. Let's just take this example. And if you were looking through a business catalog and you saw my business and you saw my balance sheet, and then you saw over the last whatever, right? But here's a very reasonable way to look at it. Let's say that you look at my business right now, and I anticipate that my overall earnings for my business this year is going to be about 60 grand. My overall earnings for my business next year is going to be about $150,000 to $200,000. And my business right now is being evaluated at 15 times of my earnings today. But you took a look at my balance sheet and you understood, and you effectively took a look at me. Right, I've said that you need to take a look at the owner of the business. I talk about this all the time. The biggest risk of a business is the owner of the business. You need to take a look at the management. Right, Warren Buffett does the same thing. I actually did not know that. All these things about But I was watching this documentary on Warren Buffett, and I was like, he effectively more or less does the exact same thing as me. I do effectively more or less do the exact same thing as Warren Buffett. And I've talked about this. When you get into the very top portions of the economy, everybody is effectively doing the same thing. Right? But let's say you take a look at my business and you say, okay, his business right now is evaluated at 15 times its earnings at 60 grand. But next year I am looking at his balance sheet, right? He's acquired more land. The land is substantially larger than the one that he has now. I know this guy, and not that I know this guy, but I've taken a look at the guy. He's a solid fella. I mean, we're talking about, potentially one of the most capable farmers on the entire planet, right? And his earnings are going to go up in a drastic fashion within the next 365 days. So then it's then think about it like that. If my business is trading at 15 times its earnings today, and within 365 days, I anticipate that my growth is going to be 325%, then 15 times my earnings today is a very low multiple. This is what I mean by growth is a very important metric in business. I was saying this, just a little while. Growth is a very important metric. If you have a large amount of growth, your business will more than likely logically be evaluated at a higher multiple than what you have right now. Why? Because next year when your business grows, you will effectively start hitting that range again, right? I mean, you will more or less eventually fall back in between that 15 to 25 times multiple range. All right, because all businesses are evaluated in the exact same fashion. They are evaluated at a multiple of the earnings, right? And so, it's like when you develop an idea of how to make money, you should really have an understanding of why. And this is also why I do not suggest, things like Bitcoin, right? I mean, it's like if you want to take the whole idea of wealth, wealth whispers, money talks, but wealth whispers. The big problem when I listen to most people talking about Bitcoin, and Bitcoin has the same problem as money. From what I have seen, Bitcoin is the same problem as cash. Eventually, what's going to happen is that, because here's the thing, it's like, a lot of these people who are thinking about Bitcoin are thinking about it in terms of a communist lens. They're going, oh my God, Bitcoin, the thing's going to go up, and there is no way. Okay, Bitcoin and cash are effectively equally problematic. The same problems that there are with cash are the same problems in Bitcoin. Eventually, like, let's just say that Bitcoin goes to $10 million a coin. Let's say Bitcoin goes to $10 billion a coin. Well, when Bitcoin goes to $10 billion a coin, the people who have the majority of the Bitcoin are going to effectively have all of it. I've talked about this all the time. When it comes to money, there is nothing that can be, the thing about money is that there is no even distribution of money. It will never happen. The people who are the best will take everything. That's how it works out. And if you want to take a look at it from my lens, this is going to sound horrible, but I'm just going to say it. When you take a look at me, like, if you're watching my channel and you're taking a look at me, there is a very real possibility that I make more money than you and everybody combined. Legitimately, everybody that you know combined. I actually make more money than you and everybody you know combined. My income is somewhere between 100 and 200 times the median income of America. But if you took a look at how much money I make, and let's say I worked until I was 95 and I managed to make the same amount of money every single year for the next 62 years of my life, I would barely have half of $1 billion. That's it. So the higher that you go on the wealth scale, the more uneven it becomes. And it will always be that way. There is no even distribution of capital, of capital. There is no even distribution of capital. You have to understand this. When you start talking about, and I've talked about this in terms of, like if we wanted to take a look at it, imagine that, imagine that we had the entire population of the earth. And we gave everybody a 20-acre field. We gave everybody a 20-acre field, and no matter what everybody did, they would only get a 20-acre field. Why would someone like me, at that point, work to do extremely well for myself if I will always be stuck on a 20-acre field? Why would I do that? I wouldn't, right? We would be punishing successful people. And we don't want to be in a situation where we are punishing successful people, right? And I talk about this in terms of many different aspects in the tax system and everything. The tax system does not exist to punish wealthy people. You need to understand this. The tax system exists to encourage reinvestment of capital. A lot of, if you're poor, you probably look at the tax system as a punishment, but it is not a punishment. It is an encouragement to reinvest capital. All right, you can take money and purchase tax deductible assets and reduce your taxes as well. Even if you have no money, you can do that. You don't have to have a large amount of money to start accumulating tax deductible assets. It doesn't matter. This is the thing. I've said that this is the beauty of America, right? I mean, if you want to go and you want to, invest in a company, then you can do. You don't have to ask nobody. You can just go and do it, right? I mean, you can take a look at your opportunity, figure out, is it a good idea or is it not? Think about it for yourself. Go over everything 5,000 times. And if you feel like it's a good idea, then you can do it. You don't have to ask anybody. All right. And so, but the thing, there is no even distribution of capital. It will never happen. And it's communist to think about it as it could happen. It can't happen. All right. We should live in a world where the best get to take everything. We should. All right, that's the most that is the most fair as fair will get, because now we are encouraging people to do the best that they can. All right, at the end of the day, that is why. And fundamentally, in terms of a universal like karma idea, that is the best that we can do. Giving everybody an equal share is not ever going to work. It doesn't. You are punishing people for doing very well if you do that, and that's not a good idea. In terms of a fundamental belief system, that is not a good idea. So Bitcoin and cash have the same problem, if you think about it, because let's say that Bitcoin goes to $10 billion a coin. Then we run into the same problem with cash, where the people who have the Bitcoin have all of the money, and the people who don't have Bitcoin effectively have nothing. All right, we run into the exact same problem. It's the exact same thing. There, there is, the bit. That's also why, the whole thing about Bitcoin is that, when I go and I look for, but Warren Buffett's investment philosophy was actually very interesting, because my whole thing was that you want to intentionally generate equity for yourself. That's my big thing, right? You want to intentionally build equity for yourself. But Warren Buffett's whole thing was that he is looking for a business that is on a growth, that is Warren Buffett's whole thing is that he is looking for a business that is growing by itself already and has solid management. That's his whole thing, right? He effectively just wants to put capital into something and never talk to him again. And if they do anything that makes him feel like he wants to take his money out, then he will take his money out. That's how he does it. He looks for businesses that are growing. He looks at the growth multiple, or he looks at the earnings multiple. He looks for a business that is growing, has a solid foundation, has a solid, opportunity in the market, and then he invests his capital, right? I mean, he goes through companies one by one, looks at their balance sheet. And I was like, that's actually interesting, because Warren Buffett, he's taken the portion of the whole situation out where he is going to, effectively be the one who generates more equity for the company. He actually took that part out. He's looking for companies that are already going to generate more equity by itself. All right. And I was like, that's interesting, right? I mean, like if I was going to invest capital, that is more or less what I would want to do too. Because me, at the end of the day, but the thing about me is that if I was going to invest capital, that is what I would want to do too. Like legitimately, if I was going to invest capital in a different, but the thing about me is that when I run my farm, I make enough money to do anything on the entire planet. Legitimately, and like right now, my net worth is about 2 million. All right, my net worth is about 2 million, and within the next 365 days, my net worth will go somewhere between 5 and 10 million. All right, and then I can already, there is legitimately, I don't see any, if I legitimately saw an opportunity to whatever, go into, buy, invest into another business that I legitimately saw a solid growth opportunity for, and I was like, wow, this is a solid business. They have good management, and they're trading at a growth multiple, at a 15 times growth multiple of last year's earnings, and I believe that whatever, right? I mean, like, let's take a look at my balance sheet, right? My balance sheet is that last year or whatever, I made whatever, let's just say 60 grand net profit. That was the earnings from my business, right? And I evaluated my business at a and my business is in a state of growth, and so I took an evaluation of my business at 15 to 20 times earnings. So my business is effectively worth about $1 million. All right, my business is worth about $1 million. But let's say you took a look at my balance sheet, and then you took a look at me, and then you took a look at the whole situation, and you said, oh, well, this guy, his earnings, his business is being evaluated at 15 times earnings, but I've taken a look at how much money's involved, and he took his money off of his business to buy himself more land. And and I know this guy. I mean, the guy is a very, 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 potentially one of the most capable farmers on the entire planet. Legitimately, this guy legitimately lives and dies on the farm. All right. I mean, he is not going anywhere. I mean, he is legitimately going to farm every day for the rest of his life. I know this guy. All right. And, I've taken a look at him, and, it's kind of a miracle that he's even gotten to this point. Right, I mean, generating $1 million, $1.5 million, $2 million on a 10.5 acre field is incredible. Right, I mean, it's incredible. I mean, you don't end up this way by luck. Right, I've always said that you cannot skip the work. I mean, when you take a look at me, my work speaks for itself. Wealth whispers, right? Money talks, but wealth whispers. When you take a look at what I'm doing, I mean, you can tell, right? I mean, this might legitimately be the wealthiest thing that you have ever seen. Right. I've taken a look at the guy. I've taken a look at his business, and I've taken a look at his balance sheet. He's growing his business by buying more land. He's bought more land. He's taking that land, and he's probably going to go and run more cattle on it. All right. Substantially more cattle. And when he does this, and I've actually listened to, how much money does he anticipate he's going to make? And right now, let's just say that you find my business in a book of businesses, and my business is being traded at 15 times, 20 times multiples of my earnings today. But over the next 365 days, my business earnings are going to go up by 325%. If my business is being sold at 15 times the multiples, 20 times the multiples today, and it's in a trajectory of growth, of substantial growth, then my business evaluation, the multiple of my business will be very low next year, very low. And that is where you can make a large amount of money investing capital. All right. That's how Warren Buffett does it. I was watching a documentary on Warren Buffett. I legitimately had zero idea about why he invested in Geico and et cetera, et cetera. I had zero idea. I legitimately did not know. But, you know, and this always, this ties back to the whole idea that when you go onto the very top of the wealth system, the higher that you go in terms of wealth, the larger the disparity becomes, and it will always be that way. We cannot live, communism does not work. Giving everybody a fair share does not work. We should allow people who are the best in the world to take everything. If you are the best farmer, then you should be allowed to buy as much farmland as you want. You should not have to ask anybody. You should not have to whatever, right? If you are legitimately the most capable farmer on the entire planet, for whatever reason, you actually made it, right? You actually put in the work and you actually made it. You should be allowed to buy as much farmland as you can possibly farm, because when you farm, there is a reason that you are the best. You are going to do the best, you're going to produce the best results, etc., right? There is no reason to punish this individual. I mean, there is no benefit to society from punishing this individual. All right, and so, you know, it will always, what is fair is what is fair, and that is what is actually fair, is what I talk about. There is no sharing everything. That's communism. You should work to become the best. You should do the best, and you should work to become the best that you can be. All right, and you should not be in a situation where you're looking at somebody like me and you're going, oh my God, it doesn't. And I'm not saying, but you should not be looking at people who make a drastic amount of money and thinking, oh my God, this is some malicious individual, right? Oh my God, he's got such a large amount of money, he must be a bad person. That's not how it works. I'm just a normal dude who is very, 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 very good at farming. That's and also I actually, it's like a whole thing is like I more or less I don't act like an idiot, right? I mean, I don't go and do drugs. I don't go and drink all the time. I don't go and try and make some worthless scheme to make money. Oh my God, if I do ABC, if I come up with this ridiculous scheme, if I start myself an LLC and then I, take maximum leverage and then, accumulate cattle and then liquidate those cattle and pull the money out of the business via a salary, and then I just bankrupt the business, then I can keep all of them. I don't do stuff like that, right? I'm not like fraudulent. Right, I'm not like scheming, right? I mean, this is legitimately what I do. I'm very okay with it. I mean, I don't come up with these worthless schemes. I don't steal, right? At the end of the day, it just is what it is, right? I mean, let's take a look at it, right? I mean, and so, but I was watching this documentary on Warren Buffett, and I was like, that's kind of interesting, because he's taken the portion, because I was talking about it, like, one of the big things that you can do with business, and actually, it actually added a lot of depth to my understanding of businesses too, because I was like, if you were going to just invest capital with the intentions of investing capital, you're not looking to get involved with the business. That would be a very good idea. But if you are looking to get involved with a business, I mean, either which way, you want a business that is growing. You don't want a business that has plateaued. If the business is effectively doing the same today as it was, yesterday, and as it was doing last year, and as it was doing 2 years ago, and you anticipate that the business is going to do the same next year and the year after that, the multiple that the business is worth is going to be lower. All right, it's going to be lower. And, and so, it's like, if you really want to increase the equitable value of a business, and I've talked about this, is to make the business grow. Right, and I actually spoke about this, but you want to have a realistic idea for growing the asset. You really want to have a realistic idea of how you are going to, I've said increase revenue, right? Because when you increase your earnings, the business is going to be evaluated at a multiple of those earnings, and you don't want to buy a damaged asset. You want to buy good assets. All right, you want to buy good assets. If you find a good asset at, let's say you find a good asset at 20 times its earnings, but that asset is worth whatever, right? 20 million. And then you find a bad asset that is worth 5 times its earnings or 3 times its earnings, and it's being sold for 3 million. You're actually better off buying that 20 times asset. In all honesty, you are better off buying that 20 times asset for 20 million. All right. Granted that thing is evaluated in a way that is anticipating a large amount of growth in the future. There's a large opportunity in the market, etc., etc. Just from a straight capital standpoint, in terms of just money. All right. And so, and I was watching this whole thing, and I was like, I honestly did not, know any really any of this stuff about Warren Buffett, about how he did that. How he, took money, and he took a look at Geico, and he realized he took a look at the business in the 1950s. And he said, Geico, car insurance is something that everybody more or less is going to need, right? Car insurance is something that everybody's going to need. And the whatever, right? It's not being traded at a larger multiple. And Geico has been growing substantially. Geico has been growing. The business has been doing better every single year, right? And so he went and he spoke to the owner, or the CEO, or I don't remember exactly who he spoke to in Geico, but he talked to the person in charge, right? He went and had a brief meeting with the person in charge and asked them about the business. And he liked the guy. He took a look at the guy, and he said, this is a solid fella. The business is good. I believe that the product is, and the business is going to go, the business is going to grow. And so I'm going to invest my capital in this business. That's how he did it. And so he did not intentionally make the business do any better, right? So he took that portion of my strategy out. But the thing about my strategy is that you have to understand that my strategy comes from the perspective of me running my own business. When I talk about generating a large amount of money via a business, I found that the way to make the largest amount of money is to intentionally increase the earnings. That's what I found. But you have to understand that is from a perspective of somebody who effectively started their own business. I don't just invest capital. So my perspective is going to be a little bit different than Warren Buffett, but both are technically correct. All right. And so, but me, it's like that's the whole thing about the stock market. If you in terms of a good investment right now, when I take a look at the stock market, what do I think is a good investment right now? I think that the S&P 500 is going to be one of the most squared away investments that you can make. The S&P 500 right now is trading at 31 times its earnings. And that's effectively just another way of saying that the stock market is anticipating a good bit of growth in the U.S. economy over the near future. That's what 31 times earnings means. And so if the S&P 500 were to fall to 25 times earnings, I would be more motivated to buy it. I would not dump the stock. All right, I would not be like, oh my God, the S&P fell to 25 times earnings. Or, if the S&P fell, if the S&P fell to 25 times earnings, I would be more motivated to buy it. If the S&P 500 fell to 20 times earnings, I would be more motivated to buy it than I was motivated at 25. I would not dump the stock. The S&P 500 is a very good stock. All right. And so, but if you have a better idea, if you are looking at companies one by one, like Warren Buffett did, and you manage to find a company, and you can take my balance sheet as an example. My balance sheet is a very, very, very good, pristine example of a business that is, that is generating millions of dollars a year, millions. My business generates millions of dollars a year. And if you take a look at my balance sheet, it is a pristine example of what something you should be looking for. You have a business that is, let's say you find a business like mine and it's being evaluated at 15 times earnings. You've taken a look at me, and then you've taken a look at the future of the business. You're taking a look at what the boss man is doing with the business. He's buying more land. He's going to expand his business, increase the size of his cattle. I've talked, he's going to increase the equitable evaluation of his herd, et cetera, et cetera. You've sat there and you really understand what's going on with the money. And the business is being sold at 15 times multiple, 20 times multiple. Then now is a very good time to invest that capital. All right, it's a very good time to invest capital into that business if you have zero intentions of getting involved in that business. All right, and how much capital do you invest? Depending on how much do you anticipate the growth is going to be, I would say that my growth is going to be about 325% over the next 365 days. I will generate about somewhere between $5 and $10 million. That is what I anticipate. All right, and so take a multiple of that. I don't, I didn't sit down and crunch the numbers, but maybe, well, actually, that is the numbers. I would evaluate my business in terms of my future earnings and et cetera, et cetera. I'm going to be accumulating these assets and making this much money. I would anticipate that my business is going to go from being worth about 1 million. My business is going to be worth about 1 million today, but it's going to be worth about somewhere between 5 and 10 million by next year. That's what I anticipate. And so, but if you are looking to invest in a business, that's more or less what you're looking for. You're looking for a business that has solid growth opportunity, and the person who is in charge of the business cares a lot about the business, and they have a very, very, very good idea of how they are going to grow the business. That is what you're looking for. When you're looking for a business, that is more or less, that is what you're looking for. And that is the stuff that you should invest in. And when you, and I know that this is, the video is getting very long, but you have to understand that everything is not a good opportunity. You need to be able to look at something, and a majority of things, and here's the thing. When you take a look at something like this, you have to understand that what you're talking about is a 0.0000001% chance of success. The first thing that you find is not going to be the best deal. More than not is not going to be the best deal. You need to really make sure that you take a look at the details. Check everything 5,000 times. Make sure everything is squared away. Make sure everything is actually solid and good to go. Make sure you check your deal very, 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 very thoroughly. Whatever it is that you're going to invest in, and you need to invest. If you do not invest, it's, and I'm not saying, and I'm not saying, my business is not for sale. All right, I'm not interested. All right, I already have more money than I could ever use. All right, you're not buying my business, all right? And you're definitely not buying me. Keep your BS to yourself. I'm not interested in your investment, all right? I don't care, all right? I already have enough money for me to do whatever the heck that I want, all right? And so, but when you're looking for a business, or when you're looking for an opportunity, you're looking for something like this. All right, you're looking for something that it's like, but me, from my perspective, when I give my perspective, I talk about intentionally increasing the earnings, right? When you get involved with a business, if you are going to run the business, you should have an idea for intentionally increasing the earnings. Why? Because if you intentionally increase the earnings, your business is going to be evaluated at a multiple of those earnings, and you will generate a large amount of money via equity. But the thing is, and this is the part that I did not understand. This is something that kind of put things into an interesting perspective for me, that if you have a business that is growing, that is actively growing, it is going to be worth substantially more than a business that is making the same amount of money, but it is not growing. A business that is actively growing is going to be evaluated at a substantially higher multiple. So, my business is a very good example. My business right now, if I evaluated my business at 15 to 20 times my earnings from last year, by next year, that would be ridiculous, because I am anticipating that I effectively, more or less, somewhere between 250 to 325% increase my income. Right, so it would be ridiculous to evaluate my business at 15 times earnings. If my business was for sale and it was being sold at 15 times earnings, it would be like stealing, right? I mean, it would be the best deal that you have ever gotten in your entire life, right? I mean, but it's not like stealing. I mean, it would be like the best deal that you ever got in your entire life, right? I mean, my business is being sold at 15 times my earnings of this year. But when you take a look at my balance sheet and you take a look at me as the you know, the guy who's running the business, and you take a look at it for what it is, you know, you're like, he's buying more land, he's going to increase the amount of cattle that he has. He is potentially one of the most capable farmers on the entire planet. You know, and I've listened to his business strategy, and he's talking about increasing his business by 325% over the next 365 days. Then selling my business at 15 times of its earnings this year would be ridiculous, right? I mean, you know, so the growth multiple, it's called, I guess it's called, I don't know if it's called a growth multiple, but that's another way to, it's a growth multiple. If your business is growing, it's going to be evaluated at a higher multiple, substantially higher. And so, but that's it for me today, YouTube. Y'all have a good one.